Today is December 29, the last trading day of the calendar year, and coincidentally, we detected unusual options activity on JD in the form of a calendar spread. And so in this video, we will go over the data on these unusual options and show what a calendar options strategy is based on this data. So without further ado, let's get into the analysis as usual. Here we have the options time and sales tape. We can see here at the 9:49:11 second mark, we have 3,303 contracts for the 32 strike calls, but different expiration cycles. This is what makes it a calendar spread. Same strikes, but different expiration cycles, January 12 and January 5. We can see here other trades as well for this same trade, okay? And we'll find the total amount. And before we get to the option chain, we can calculate the trade cost for each of these contracts by looking at this price here. We can see that they paid 26 for each of these contracts for the January 12s, and then for the January 5th, they sold for 8. Okay, so 26 minus 8, because they sold that to collect the credit. So each contract was $18 for each calendar spread. Okay, so when we take a look at the chain, we have January 5th expires in 7 days. We can see here 32 strikes, 14,000 greater than the open interest, so we know these are opening trades. We are also in the position, and so they sold this strike for this expiration cycle, and for the January 12 expiration cycle they bought it. You can see here 32 strikes, also 14,000, open interest much less. Okay, and so by buying these, we can see here this is a calendar spread, and we know they paid about 18 for each of these. And so this is what this trade looks like on the profit loss diagram. Okay, and since this trade value, 18 times per trade times 14,000 contracts, is $252,000, does not exceed the $1 million trade threshold that increases the probability of profit in our statistical modeling. That is why we just simply followed the trade and also in the same position. Okay, if you are interested in the higher probability of profit trades on different stocks in the stock market, then make sure to go to our website. Okay, put a link up here. And so back to this calendar spread, you can see this is what it looks like here. JD is currently trading at $28.85. We have the x-axis showing the price of the current stock, and the y-axis shows the profit. Anything above this zero, if the lines are above zero, this is a gain in profit. If it's below, then this is a loss. And so you can see that the blue line and purple line over here is below this zero line, which means if it starts to drop below this share price of around $29, then this trade would be a loss. But if it increases and stays within the break-evens of this calendar spread, you can see the break-even at expiration is here and here. This trade would be profitable. Okay, so that's around $29.74 and $34.57. So this trader who spent $252,000 is targeting this $32 for this max profit. You can see that the max profit is about $69.19. Okay, so that is well above 100% because they spent $18 on this trade, right? If they hit max profit, this would essentially be 383%, right? So that is why they are trading this with this strategy. All right, we can see from the Greeks of this calendar spread, we have a positive delta, which means it is a bullish long trade. We have slight theta decay, but it will become positive if the stock starts to move up. Okay, in all cases though, the Vega is positive. This is what makes a calendar spread a calendar spread. They have very high Vega in comparison to a lot of other strategies. Okay, and so it's very important to use this strategy when the implied volatility is not very high. That as long as it increases, this trade will be profitable. As long as the stock price also doesn't drop significantly out of the range of our break-evens. Okay, so as we mentioned, break-even $29.80 and 34. So as long as this trade by next week is around this $34 price and $29 around here, as long as JD is trading in this range, in 7 days, this trade will be very profitable. Okay, so this is what a calendar spread is. And specifically, you can use it to go bearish or bullish. Okay, because we could move the break-evens down here and create a bearish calendar spread as well. So in this case, this is a bullish calendar spread. So this trader is bullish on JD. All right. So let us know in the comments below. Are you bullish on JD or bearish? And as usual, please smash the like button, subscribe if you haven't, and if you're interested in our higher probability of profit trades, then go to our website. Put a link right up here. Have a great weekend and a wonderful new year. Take care.